Ira Epstein with your morning flash update for this Wednesday, and we are at the 15th of March, a wild 15th, and it is 2023, 8:20 a.m. Central Time. So we wake up, and now Credit Suisse is collapsing in its stock price. Their biggest backer is pulling out. They may be going belly up, so it's another bank. I'm also hearing that the Fed is definitely considering what to do with these mid-sized and regional banks. And I had recommended yesterday, not that they'd listen to me, of course, but why not do a series of stress tests right now? See what you're dealing with. How many of these securities got priced wrong? Now, in all fairness, there's an event happening right now if you're looking at bonds and notes. And this market is magically repricing security upon security. Just over a week ago, I was sitting here going, why would you gamble in these markets and get 5% on a 2-year note? Same thing on a 6-month note. Well, the 2-year got, as I said, over 5%. It hit 3.71% this morning. So in but 8 days or so, it has given back 1.25. I've never seen anything move that fast. I've been watching Treasuries my whole life. This is unbelievable in its scope. It's going to do something. It's going to reprice what those were. They're not as in bad a shape as they were. That's the key. There's another event happening. Energy prices are getting slammed, and I mean slammed, around the world. It appears that Russia's been producing more oil than thought. That's coming out of the IEA. That's weighing on the market. And, of course, the slowdown via the banking is weighing on everything. So here you are, Mr. President. Don't I sound like Marilyn Monroe? Mr. President, you are there. You are under your $70 a barrel. Start the buying program for the SPR. Let us put oil back in and start protecting ourselves. I would expect that will cushion the break when the program begins. We won't know when if they're smart. Did you hear what I said? You don't go bragging. We're doing it. Be doing it. Let the market pick up on it and take the reward afterwards. Don't tell the market what you're doing. Grains are sort of in their own world. We have the crush coming out today, so you want to be paying attention to that. You're getting the buying again in the gold market, and that's carrying the day for the silver, but not any of the other metals. They are just getting smashed in a big way. Copper, down another 10 cents. Now, the interesting news is, and I wrote about it already this morning for my morning report, China is doing better. Their statistics departments have come out and shown the January, February numbers. But let's go to some numbers here and see what's moving the day. First, in the mortgage. This is before this huge break that's happening, and yet mortgage index was up 6.5%, the purchase index up 7.3%, the refi up 4.8%. These numbers should move even higher over the next couple of weeks. We're getting into the warmer weather. There's a window of opportunity for those that have been looking for drops in mortgage rates. You're getting it. The market is repricing everything right now via the banking situation, and no, you should not have trouble going to a bank and getting a mortgage. For businesses, however, everything's changing. That easy banker that you could call on the phone, hey, I need to increase my line, I got to do blah, blah. He's liable to be out to lunch when you call him. He's getting inundated. He's scared of what he's seeing. The banks are going to tighten things up because the Fed's going to make everybody tighten up. Remember what I said on that. The New York Fed Empire State Index, look at this big decline, 24.6. They only expected it down 7.8, and that would have been a good reduction from the 5.8. So you've fallen off the cliff on the East Coast in terms of the manufacturing, and it goes right on through all the numbers. If you take a look at the PPI, you can see what this has done. This number has also given the Fed some cover if they want to be very, very moderate and either do nothing at a week from today's FOMC meeting or just go with a moderate 25 basis point hike. If you lose Credit Suisse and we lose any other bank in America, I seriously doubt the Fed will then go for any hike. If you get to the point where we don't lose any more banks, Credit Suisse can live through this, whatever, I don't know. You're not seeing the foreign banks tumbling. Then the Fed can go the quarter point. That's how I'm viewing things, and it's very, very fluid. But this helped them, the PPI, to give them a little bit of cover, as I see it at least. Let's see if I can get you here. Advanced retail sales in the U.S. came in right as expected, with the exception of ex-autos, which was down. So is the consumer pulling back a little bit? That could be the case. Another event that's happening is I showed you commodity prices. What do you think's happening with inflation readings as they're sinking away? Down and away you're going. We'll get at 9 o'clock the National Association of Home Builders, their index. The Conference Board Helpline Index. We want to see what that's going to do. I would expect jobs market staying strong. We could be surprised, but I don't expect that. And the EIA stocks are going to come out at 9:30. And again, what they do doesn't matter as much as the fact that if Russia's producing more oil, suddenly the world has more. It's weighing on everything, as you can see, as to what's happening through there. Now, as you look at the markets, let me define what yesterday was. If you'll recall, when we had the big break on Monday, I said, look for a bounce on Tuesday. Big breaks on Monday, you get reversals. They're often called a dead cat bounce because you haven't changed anything. It's a bounce because you broke in that case so much that you get a bounce away. Then whatever happens the next day, traders look at the day or day after. If the market resumes the downtrend, they'll call it a dead cat bounce, all right? I hate the term because I got 3 cats in my house. I have 3 cats I keep outside, and I'm obviously a cat person. And we'll see what happens with that, but that's what you'd call it. Again, you're accelerating to the downside here. This helps everybody. Do you understand that? That helps everybody. Certainly not helping in the stock market today. And we're going to be writing on all this. And, you know, that is the beauty of it. We have a team. It's not 1 or 2 writers. We have a team of people that are going to cover today for you everything. Option strategies, cash markets, what are they doing? I don't care if it's the financial arena, the grain arena, the soft markets. We're there, we're covering, telling you not only what's going on, throwing out trading ideas, be it in the energies, all these, who's doing what, why are they doing it? And then you start getting the chart pictures with this. So it's not just market letters, it's charts galore. And we're showing what we see. So if you don't get this from your broker, and I guess as most of you don't, this is something you want to take a look at. Does it help you with your ETF trades and your spiders? Of course, because they're based on futures in many of them. How do you get this? Just go to our website under free offers. You can click up here. You'll see an icon. Give it a click. Take advantage, and you'll see other free offers with it. I'm Ira Epstein. You have yourselves a great day, and I will catch you all first thing this afternoon as we do our market wrap-up. Take care.